Do you know that your bank account balance is just a promise, not cash sitting in a vault, and that promise can vanish in a crisis? Let's talk about the fractional reserves. Fractional reserve banking is a system used by banks in which they are legally allowed to lend out and collect interest on money that never existed in the first place. Let me try to explain. Say 10 people each open a bank account and deposit $100. That's $1,000 in the bank's safe. The bank takes $960 of this money and lends it out to other people. But even though there's only $40 in the vault, the bank will still say each of the 10 clients has $100 instead of $40. Then the bank can in its books claim to have $1,960. That's $1,000 in client deposits plus the $960 lent to borrowers, since debt is recorded as an asset, when in fact it only has $40 in the vault. Next, the borrowers spend the $960 in shops. The shops deposit it in the bank. The bank then lends out $920 of this new money to another group of customers and is left with $80 in the vault. But its book now says it has $3,840. Again, only $1,000 is actual money. The rest is debt. You will notice that $2,840 has been created without being backed by anything, i.e., it does not exist as cash or any physical asset, nor is it a result of productive labor. It's created with the hope that borrowers will return it. What if they can't? If a bank suspects some borrowers won't pay, it hikes the interest rates charged to them, takes all the amounts they owe, packages them, and sells them to investors such as the PIC with the promise of very high returns when borrowers pay. Doesn't change the fact they can't pay. When borrowers are unable to pay, pensions and life savings of the poor working class and the elderly disappear. Yet, all of this is perfectly legalized by the Reserve Bank. Hence, nationalizing it will not make any difference, but that's a story for another time. The study of money above all other fields in economics is one in which complexity is used to disguise truth or evade truth, not to reveal it. The process by which banks create money is so simple that the mind is repelled. Quote by John Galbraith. Now, what happens when there is banking crisis? The banks won't be able to pay you your whole money in cash because they don't have it. They can't just print more money and add it into circulation because it will weaken the currency and cause inflation. Only the first few will get their cash and thousands of others will forever be frustrated. Now a new financial system is here to solve all this. It is called the Quantum Financial System, QFS. It is a fully blockchain tokenized economy. No need of any reserves. Transactions and remittances are done in seconds, and the ISO 2022 compliant cryptocurrencies like XRP and XLM will be the new standards. Spending your money anywhere and at any time without unnecessary questions. No KYC required. Do note that some institutions like banks and crypto exchanges sell your details to hackers. A new type of debit cards and ledger called the QFS ledger will be issued to you. Before 2020, the required reserve ratio was typically 10% for large banks, meaning if you deposited $1,000, the bank had to keep $100 and could lend out $900. Since March 2020, the Federal Reserve dropped the reserve requirement to 0% to support lending during the pandemic. That means right now, banks in the US aren't legally required to keep any percentage of your money as reserve. Get your money off banks, especially if you are in Australia, Canada, UK, or the United States, as bank crashes are inevitable and will happen soon. Buy the ISO 2022 cryptocurrencies and back them up in the QFS ledger, and you are ready for the new financial system. If you don't still understand, drop a comment and I will attend to you, or just send a direct message for proper guidance. Like and share this to your loved ones.